Let's bring in Alan Nuckman. He's a chief market strategist at Agora Financial down at the SIBO. Alan, we're going to talk your morning trade, but let's talk some markets first because we're at, as you like to say, all-time forever high.
Recording records. That's what we're doing now. So this should be no surprise. We had talked before. It was a matter of when, not if, that I thought that we were going to make another push to this top. Now see how we follow through. Now the S&P has been sideways for many months between 2,800 and 3,000. This breakout targets 3,200 as the first stop. So that's about 5% above. So there's still more upside.
All right. Now, Alan, what do you look at to see how much upside there is? I mean, how do you gauge whether or not to buy or sell VIX on a day we're at 13, which has been pretty rare in this market?
But we're still 25% above that low. So there's still more downside in the VIX, meaning more upside in stocks. I didn't even get into the full V recovery retracement. You know, you take the distance of the last S&P fall and you put it on that old tip top, and that's the next upside target. So we're looking really more than 10% above where we are here. But I wanted to give you the modest objective first. There are so many things that are positive right now. We've got the extended of the Brexit. We've got, obviously, earnings are coming in hot and heavy. 80% of the companies are beating their EPS. We've got so many things happening. You know, the trade issue has kind of been pushed aside once again. And so I think we've got a lot of positives to focus on. The choice is still stocks. We're gonna cut rates on Wednesday. There's a 90% chance, and there's still another 40% chance that there'll be another cut by March. So these things are all positive for the stock market.
All right, I like it, Mr. Nuckman, and now credit to the optimist in you, Alan, for a day where we're looking at highs. Let's talk BP though. Your morning trade, you're like going across the pond. You're going energy. What's going on here, Alan? Aren't you buying up software and chips today?
I am looking for distressed areas and stocks, and that's the game that I play. So looking at BP, this stock is essentially unchanged in 2019 compared to the overall market, and it's 10% off its highs. Now let's talk about oil, because obviously this is a commodity play. Now oil has had a breakout, but we called it a fake out breakout when we had the Saudi Arabia issue. It had traded between 50 and 60 for 3 months in the summertime, broke out, but then came back inside that channel. We saw some profit taking and a drop, and so we've seen a recovery since that time, and the 55 level is an important level as the midpoint of that range in the summer, and 57 is what we're right close to right now, is the halfway point of that recent drop from the top. So as global growth concerns are alleviated, the oil market can make a comeback, and albeit it does have a delayed reaction to what's happening in the macro market sometimes. So it's an oil play, and if you look at BP stock, it had a double bottom down at that 36 level. So it's been trading between 36 and 40 since July, a breakout above this 40 level, that target's 44, and that happens to be the recent top in 2019. So that's what we're looking at. Inexpensive option here. A January call. Now, going out to January, even though my indicators are saying something's going to happen more quickly than that, we're seeing a lot of smart money pile in. I can buy a January option, which is deep in the money, a 37 call. Again, let's remember that low is 36. A 37 call is trading around 3, and it's $2.75 in the money. So the January option is almost 3 months of time. The December option, for an extra $20, it makes sense to go out to January because you've got a high 80 delta on this, meaning it's going to act like the stock, plenty of time, and a nice bounce in this up to that 44 level. This option would double. That would be 100% return.
Okay, so essentially sort of like a stock replacement, right, Alan? At right now, $39.70, up about 80 pips.
You know my game. I was going to say, you know my game. That's the way we do it. We go within the money options that are going to act like the stock, but they're going to give you a more exponential return, but you have limited risk on these plays. So instead of tying up money buying the shares at this level, you can buy an in-money call that's going to act like the stock, and it's been successful for anybody that's been watching the show. The bull market genius has done pretty well.
All right, there we go. I'm looking forward to this Wednesday. We'll see if I assume when you say bull market genius, you're talking Jay Powell, right, Alan?
I think he's done a pretty good job. Consider the pressure he's under. The Fed's done their job to get the markets where they are. I don't know how sustainable it could be to keep adding Red Bull to the punch bowl, but we'll see.
All right, there we go. Always, never mind when you had a little Red Bull for us, Alan. Appreciate it. Chief Market Strategist at Agora Financial. Long BP is a trade. We'll be right back. Let's talk about that Jay Powell meeting coming up on Wednesday and more about the economy right after this.
Accelerate your investing journey with free 2-day educational workshops from TD Ameritrade. Gain real-time practical insights from our team of experienced education coaches. Whether you're a new investor or a seasoned trader, there's a workshop just for you. Identify your